The hidden reality of car insurance in modern America. In modern America, car insurance has become for more than legal requirements for drivers. It is now one of the largest and most powerful financial systems in the country. A massive industry built on risk calculation, corporate profit, artificial intelligence, surveillance technology, and the constant fear of financial disaster. Behind every mount insurance payment exists a hidden world of economic pressure affecting millions of ordinary American families every single day. Every morning across the United States, millions of vehicles flood massive highway, crowded city streets, urban neighborhood, and the endless traffic system. Beneath the moment of a modern American life operate an invisible financial machine silently tracking, calculating, analyzing, and profiting for every mile driven. For most American cars, insurance feels like just another monthly bill. But behind the advertisement, policy contract, and the customer service call exists a multi-billion-dollar industry deeply connected to Wall Street investment system, corporate power, government regulation, healthcare cost, advanced artificial intelligence, and the growing financial struggle of modern life. The modern insurance industry operates like a giant economic engine. Insurance companies collect billions of dollars every year through the monthly premium paid by the drivers nationwide. But this money does not simply sit inside company bank accounts waiting for accident to happen. Instead, insurance cooperating invest enormous amount of customer money into the stock marketing. Government bonds, huge funds, real estate projects, corporate portfolio financial assets into long-term investment system. Even before paying a single accident claim, many insurance companies are already generating enormous profit through powerful investment strategy operating behind the scenes. At the same time, the cost of accident across America has exploded to historic levels. Modern vehicles are no longer simply machines made only for metal engine and mechanical parts. Today's cars are highly advanced computer-on vehicle filled with a camera, radar system, parking sensor, lane assist technology, adaptive cruise control system, collision detection sensor, computerized electronic touchscreen display, artificial intelligence driving assistance, and a highly sensitive digital safety system. Even a small accident that once required a simple bumper repair can now cost thousands of dollars because damaged sensor and electronic system must be completely replaced and professionally calibrated using expensive specialized equipment. Electric vehicles have made the situation even more expensive. Tesla vehicle and other modern EVs contain 10-km battery system and highly advanced electronic structure that are extremely difficult and dangerous to repair after accident. In many cases, small crash can damage battery compartment, forcing insurance companies to pay for a completely battery replacement costing tens of thousands of dollars. Specialized EV repair facilities, battery safety procedures, fire risk, and limited certified repair centers have all increasing insurance costs dramatically for electric vehicle owners across America. Medical expenses have also become one of the biggest reasons insurance pricing continue rising nationwide. After serious accident, ambulance transportation, emergency room treatment, surgeries, trauma centers, rehabilitation therapy, prescription medication, long-term physical therapy, disability claim, and extended medical care can cost enormous amount of money. Some accident victims spend years recovering from injuries, while insurance companies face massive financial loss for medical settlement and legal compensation case. Lawsuits have become another major force shaping the modern insurance industry. personal injury, attorney courtroom battle, settlement negotiation, fraudulent claim, legal investigation, and multi-million-dollar accident lawsuits now influence how insurance companies calculate risk and determine pricing. Every major legal settlement increases pressure across the insurance system, forcing corporations to prepare for even larger future losses. As a result, millions of drivers often face higher premiums even if they have never caused an accident themselves. Distracted driving continues to increase accident rate across the country every year. Smartphones, texting while driving, social media distraction, speeding, drunk driving, fatigue, reckless behavior, road rage, and growing traffic congestion have created extremely dangerous road conditions in many American cities. Insurance companies now rely heavily on predictive analytics and advanced risk algorithms to study every driver behavior in extraordinary detail. Every history credit across vehicle models, neighborhood crime rate, annual mileage, occupation, driving habits, and even online behavioral data on influence how much a customer pay every month for insurance. Young drivers face some of the highest insurance costs in America because insurance companies consider them statistically high-risk customers. Teenagers and inexperienced drivers are far more likely to be involved in accidents due to speeding, distracting driving, nighttime travel, lack of experience, and risky driving behavior. For many young Americans, expensive insurance payment become one of the first major financial burdens they face as adults. One of the most important financial decisions drivers must make is choosing between liability insurance and full coverage insurance. Liability insurance usually protects other people after accident but often does not cover damage to the driver's own vehicle. Full coverage insurance offers broader protection include collision, theft, vandalism, flood, storms, fire, natural disaster, falling object, and many unexpected emergencies. However, full coverage policies come with a significantly higher monthly cost, creating difficult financial choices for families already struggling with inflation and rising living expenses. Behind the scenes, insurance companies now depend heavily on artificial intelligence, surveillance system, telematics device, and behavioral tracking technology. Smartphone insurance apps, GPS monitoring system, predictive risk scoring, and driving behavior analyzing allow companies to collect massive amounts of customer data every single day. Some telematics systems monitor acceleration, braking habit, speed, nighttime driving behavior, distracted phone usage, sharp turn, and even have aggressively drivers operate their vehicles. Artificial intelligence has become deeply connected to the modern insurance business. Computer systems constantly analyze customer risk level in real time, while AI software investigates suspicious claims, identify fault patterns, predict financial losses, and helps corporations reduce payout. In many cases, insurance investigators examine surveillance footage, social media activity, vehicle tracking record, accident reconstruction software, phone data, and digital evidence to challenge customer claims and minimize company losses. Climate change has also created enormous financial pressure in the insurance disaster. Hurricanes, floods, wildfire, storm, tornadoes, severe winter disaster, and extreme weather events now destroy thousands of vehicles every year throughout the United States. Insurance companies face billions of dollars in climate-related damage, forcing many corporations to increase premium nationwide in order to recover financial losses. Crime continues to increase insurance costs as though vehicle theft, catalytic converter theft, organized full-rank stage accident, carjacking, and insurance scam have become major problems in many American cities. Security footage, Ford investigation team, police operation, and advanced surveillance system now play a critical role inside the insurance industry. For ordinary Americans, the emotional pressure created by car insurance continues growing every year. Families already struggling with a house costing, fuel price, healthcare bills, food expense, student debt, and vehicle payment must also deal with rising insurance premium every month. Delivery drivers, truck drivers, Uber drivers, Lyft workers, and commuters who depend on their vehicle for several face constant financial anxiety caused by the fear of accident and unexpected emergencies. Many customers also make serious mistakes when purchasing insurance policies. Some choose the cheapest coverage without understanding the policy limited or hidden deductibles. Others fail to read the exclusion carefully, miss monthly payments, hide driving history, or fall victim to fraudulent insurance offers. After accident occur, this mistake can lead to delayed claim and debiting out of pocket expenses, lawsuits, repossession, and year of financial literacy. Despite the rising cost, there are still ways many drivers can reduce insurance expenses. Safe driving habits, comparing insurance companies, improving credit scores, increasing deductibles, bundling policies, maintaining clean driving records, taking defensive driving courses, reducing animal mileage, and driving lower risk vehicle can all help driving monthly premium. Some of insurance companies now reward safer drivers through telematic programs that are monitor behavior and provide discount for responsible driving. But even with this financial strategy, the deeper reality remains unchanged. Car insurance in modern America has become far more than simple protection against accident. It is now deeply connected to corporate power, that's data surveillance, artificial intelligence, economic inequality, government system, healthcare inflation, and the rising cost of surveillance in modern society. Behind every insurance payment exists fear. Fear of accident, fear of lawsuits, fear of medical debt, fear of lost transportation, fear of denied claim, fear of financial collapse, and fear of economic uncertainty inside an increasingly inexpensive world. For millions of Americans, car insurance has become one of the hidden reality of modern life. A system designed to protect people from financial disaster while simultaneously generating enormous profit for one of the largest industries in the country.